Hello everyone, welcome to today's major markets update for Wednesday the 18th. I'm sorry to run out of waves to count to the downside, but it's the possibility of one last fifth wave lower, as I might have misinterpreted, so to say, 3 hours of price action. Let's go straight to those charts and see what that means, because remember, we always want to know exactly what we're dealing with, but Elliott Wave is an interpretation of the price action, and you misinterpret one thing, you can get an entirely different outcome. That's why I also put these high risk, low risk, medium risk levels for long positions, so to say, on the charts. And on the daily and hourly time frame, you could already see why the high risk on the hourly time frame was indeed a high risk. Because it's not very profitable trading, and pretty much none of the even high risk levels were reached over the last couple of days for any long entry. So one should have been really diligently sitting on their hands waiting for those levels to be taken out one by one. So Elliott Wave is one thing. Trading is something entirely different. Use those high risk, low risk levels to your advantage. So here is the hourly chart of the S&P 500. Let's start here with this price action here. I don't know what it is. I have no idea what it is. So we just let it for what it is. We have 1, 2, 3, 4, and now working on this green wave 5. Now here we see, if we really zoom in, that we have only 3 waves lower. And we have A most likely, a B most likely, and this is a C wave, likely 5 waves. Then we had an irregular expanded flat wave 4. It has not overlapped with wave 1. Here you show see the high risk, medium to high risk trades, and why they're high risk, because as I said, chances of revisiting the lows are quite high when you take those trades. Yes, with high risk can come high reward, but it also means that we have a risk of revisiting these lows. So most of the time, these type of trades can result in either break even or losses. Then we have this little low here, and if the third wave doesn't reach the Fibonacci extension, then often the B wave does the trick. If this is the case, then we had an A, a B, a C of what I call a regular expanded flat wave 4. Yuck, very sneaky, because this is the price section that I was talking about. This looks like 3 waves lower, A, B, C. Very weird type of price action, and then we can start to look for this wave 5. I apologize if I misinterpret this. I had seen this as wave 3, this as wave 4, and this as wave 5. Totally valid, and then this is wave 1. It is still possible to count it that way. One could try to count it this way, but if we break, of course, below last week's low, then this is the preferred wave count. And then this interpretation is not a wave 5, but indeed a B wave of this flat wave 4. And so be it, that's just the way it is. Then the market snuck in this really nasty little B wave right there. And again, if you miss it, you can see how it completely changes the interpretation. In this case, it's 4 hours of price action. You miss it, and you can get an entirely different interpretation. So this is really as difficult as a market can ever get to you. This is excruciating, difficult market. I do my utter best to track every single scribble. Don't like it, but it has to, and you can see how that changes the outcome. That's why I've started to put this high risk, low risk, because as I said, if it's so difficult to track the Elliott wave, and it happens, nothing works easy all the time, then you can use those price levels. And again, the high risk level is already taken out. The medium risk level didn't even work either. Medium and low risk haven't even been reached. That was also on the daily chart. The high risk one didn't really work. Medium risk not reached, medium to high risk not reached, low risk, none of these have been reached except the high risk. And this is to show you that it's indeed a high risk setup. Moving on to the semiconductors. Semiconductors seem to be closer to this wave 5 low in anything else compared to the S&P 500. It still looks like we had a rather classic standard Fibonacci based impulse pattern to the downside, where wave 5 bottomed almost exactly to 200%. Wave 3 here close to the ideal target zone, wave 4 as well. And it looks like we have a potential classic leading diagonal first wave, or A wave to be determined, where 1 is larger than 3 and larger than 5. If that is the case, then I expect to retrace back to the start. And that was what we got so far. We can even close the gap here. That's fine. That is not out of the order. But if anything of all these indexes, this one still looks the best. Again, I have some trouble with this price action here. I don't know what it is, but let's leave it for now as a 1, 2, 3, 4, 5 setup. That brings me to the NASDAQ. Also here, some weird price action. I cannot discern really what it is. I've really looked at it long and hard. I just have a hard time knowing what it is. So we'll leave it for now. We've reached 176.4 for likely wave 3. And here as well, then an A, B, C for wave 4. And now potentially working on this final wave 5. It would align with that for the S&P 500, as I showed you. Same here for the NASDAQ 100. We reached 161.8. We have the ABC for wave 4. So that looks good as well. I like it. And we should now be working on this final wave 5 to about 11,000. Here we have the regular daily chart for the NASDAQ 100. We already knew we were in a strong downtrend, and the high risk entry was just about at yesterday's close. And it shows you why it's a high risk. The high medium risk, medium low, none of these levels have been reached to the upside to even start to suggest one should enter a long position. So there's very, very little damage, so to say. Most of you should have been sitting on their hands waiting for these levels to be taken out. Same again for the S&P 500. These are the high risk levels, and with high risk comes high risk. That's just the way it is. That's why I put them on the chart. Now, moving on to the Dow Jones. The Dow Jones also is a head scratcher. Ever since the B wave high here in April, this has been a head scratcher on what exactly has been going on. But before I get there, remember, we haven't even reached the high risk level for the Dow Jones. So whatever happens to the Dow Jones over the last couple of days, we haven't even breached the high risk long entry. So if you wanted to trade the Dow Jones based on this information, it was been sitting on your hands and no entry. The best interpretation based on the current price action, I get that this could be a ending diagonal wave 5, wave 1, wave 2, wave 3, wave 4, and wave 5, potentially subdividing wave 3. And this was A, this is B, and then we get C of 3. It fits reasonably well with this price action here that I have a hard time interpreting as an A, a B, and a C. Fits reasonably well with this price action. This also looks overlapping, doesn't look like a clean and clear impulse to me. And that matches that of a diagonal. Diagonals are threes. It's all ABC for 1, ABC for 2, ABC for 3, etc. So this matches quite well. We don't have to necessarily have any real internal fib relationships other than that wave 3, of course, cannot be the shortest wave. Something like this, ABC there. This looks also overlapping. What exactly it is to be determined. Then this could be wave 3 or A of 3. This is wave 4 or wave B of 3, etc. So I start to like this wave count a little bit more. In the sense it starts to make better sense on what we've seen so far since the April highs. ABC, 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 ABC. Well, if it looks like a duck, sounds like a duck, it probably is a duck. So let's keep the leading or ending diagonal C wave on the map for now. We've not reached any of these high risk levels. We can now start to lower those levels. And then we have to simply adjust the wave count based on these ABCs on the daily chart using the hourly chart. Right? Remember, we anticipate, we monitor, and we adjust. So Elliott Wave is one thing, you track the progress. You don't necessarily have to use it for trading. There are a lot of price levels that you want to look at to take, for example, a decent risk reward trade. That brings me then to the S&P 500 daily chart. Again, it did break above the high risk level on yesterday, closed above it, but today already completely evaporated. This is then the count as I showed you for the hourly chart for the S&P 500. And again, the same chart. I haven't been able to yet update for the IWM, but in essence, it's the same. So once again, the devil here is in the detail on how to interpret this price action. I don't even know how to interpret this price action. We'll leave it for what it is. 1, 2, 3, 4. Subdividing wave 5 makes perfectly sense. This is then a irregular flat wave 4. Just wanted to make it really nautical. It's very sneaky for the market to do it, but we have no overlap. The other interpretation is the 1, 2, but it's getting very close to being invalidated. Then we have here the hourly chart, high risk levels. I would always suggest using those for any determination if you want to go long or not and what type of risk you're willing to take. The higher the risk, the most likely you're going to get a bad trade versus a low risk, you have a higher chance of having a good trade. But of course, your reward is not as great because the higher you go, the less upside there's left. Semiconductors do still suggest that we have completed 5 waves lower from the March high, 1, 2, 3, 4, 5. Okay, could even be 1, 2, 3, 4, 5, and then a subdivision, but this looks like a leading diagonal. We'll give it day by day. Also, this one has not reached any, I would say, really breakout levels that we need to watch. Nasdaq could still complete a 5th wave lower for the 3, the 4, and the 5. Same here, we have an A, a B, and a C. Then we have the leading diagonal or ending diagonal wave 5 for, or wave C for 4. Sorry, so many labels. My God. This is better shown on the NASDAQ100 A, B, C, and then we can still be in this last 5th wave lower. Yesterday we closed right at the high risk level for the NASDAQ100 for a trade. This is really a wishy-washy kind of trade that definitely didn't work out, and that's why it's high risk. So please keep those charts to your chest for any trading decisions. A ending diagonal wave C for the Dow Jones starts to look more reasonable because of this very overlapping ABC type of looking price action that we've had since the April high. A, B, C. And this looks also better like an A, B, C, A, B, C. And now further ABCs lower. Nightmare, but it will last for a while before we finally complete either wave 3 or wave 5 to be determined. And that brings us then back to the fact that we have high risk, medium risk, low risk levels to watch, which we can lower as price goes lower as well, because then of course there is a lower and lower threshold to take to get a better reward. Except pretty much for the NASDAQ 100, no index has even reached above these high risk levels. And then of course the except for the NASDAQ 100 and the S&P 500. With that, thank you so much for listening. Take care, trade safe. This is a very, very tricky market out there. As you can see, things get reversed real quick, real fast. You miss 3 hours of price data, you misinterpret it, and the chart changes completely. I try my utmost best to find every single scribble to able to explain what's going on, but this starts to look better and better, in my humble opinion, for this wave 4, and then a 5 or 5 of CO4. So please bear with me. Take care, trade safe, and I see you all on Friday. Take care. Bye.